retirement plan every sole proprietor needs. Hey everyone, Adam Bergman, tax attorney and founder of IRA Financial. So listen up. If you're self-employed or have a small business with no full-time employees, you need to watch this. I'm going to tell you what you need to do in order to establish the best retirement plan for your business. Now, this is the secret sauce. I'm going to show you how you can literally come away with $1 million plus when you retire just by watching this video, because it's super upsetting to me, and maybe just because I'm a tax lawyer and a tax geek, but there is something called a solo 401k plan, which is the best retirement plan for the sole proprietor, self-employed, independent contractor, and not enough people know about it. More people know what a SEP IRA is than a solo 401k, and that should not be the case. And this is why. Before 2001, the SEP IRA, the solo 401k was essentially the same thing. They were just profit sharing plans. So if you made $40,000 and you're a sole proprietor, Schedule C, you'd be able to do 20% of your income, whether it was a SEP IRA or a solo 401k or even a KEO plan. So there really wasn't much of a difference between the SEP and the solo. 2001, we remember what happened, 9/11, hard to believe, almost 20 years ago. And President Bush signed the Extra Act into law. And a part of this bill, there was some important provisions to help small businesses and help small business owners save more efficiently for retirement. So what Extra did is it included a provision that added the employee deferrals to the solo K. So it's not just a profit sharing plan anymore. Also has an employee deferral, which I'll get to in a second. It also added the loan feature, and it also added a Roth component. So now suddenly after 2001, the solo K has several benefits that the SEP IRA doesn't have. So let's start with the first, employee deferrals. Employee deferrals in 2021, you can put away $19,500 or $26,000 if you're over 50, dollar for dollar. So if you make $30,000, you're under 50, you can defer $19,500 in pre-tax or Roth. Now again, you can, totally elective. You can put away zero. You can also do the 19.5. SEP IRA, remember, it's a profit sharing plan. Sole proprietor, Schedule C taxpayer, 20% of the 30, $6,000. Solo K, you can do the 19.5 dollar for dollar. Plus, you can do that profit sharing. Okay, so number one, by adding the employee deferral, you've added an enormous benefit to the solo K that the SEP IRA does not have. Now, the employee deferral can be in pre-tax or Roth, so long as your plan has that option. So you have the ability to do all in pre-tax, all in Roth, mix and match. It's up to you. So you have some flexibility. Number two, the loan feature, which is super important. Under the 401k, so long as your plan has the loan option, you can borrow $50,000 or 50% of your account value, whatever is less. So if you have 100 grand in your plan, you can borrow 50. If you have 20 grand in your plan, you can borrow 10. What's the advantage of the loan? Well, you get tax-free, penalty-free use of the money. And you can use it for anything you want. Pay credit card bills, medical bills, go on vacation, buy yourself a watch, a car, whatever you want. No rules, no restrictions. You can use it. 5-year loan, payable at least quarterly with an interest rate minimum of prime. Okay, those are the only rules. You got to pay back at least quarterly over a 5-year period, at least using the prime interest rate. Another benefit, with a solo 401k, if you are a real estate investor, you can use a non-recourse loan, which is known as leverage, and not be subject to what's known as the unrelated business taxable income tax, UBTI. Whereas if you use an IRA, that UBTI tax would apply and be subject to a 37% tax. So if you are a real estate investor, the solo 401k is a huge benefit that the SEP IRA does not have. Okay, so when you add all this together in the aggregate, the solo K trumps the SEP IRA each time. Now the contribution category is really the biggest benefit, right? So let me give you a couple examples. Let's say you make $100,000, independent contractor, and you want to max out your retirement accounts. SEP IRA will only let you do 20% of 100 or 20K. That's the most you're going to be able to do, 20K. Now in a solo K, you can do the 19.5 plus 20% of the 100, giving you 39.5 versus 20 in a SEP, almost double, right? Almost 2 times as much. Plus, there's something known as the MegaBackdoor Roth solo K. I've done a few videos on this. And this is a way that you can go dollar for dollar up to $58,000 or $64,500 if you're over 50 in 2021. The way it works is simple. You make after-tax contributions, and then you can move the funds to a Roth IRA and convert it into a Roth IRA, or keep it in the plan and convert it to a Roth 401k. That's something a SEP IRA is not going to let you do. You can convert your SEP contributions to Roth, but you're not going to be able to go dollar for dollar, right? All you're going to be able to convert is that profit sharing amount, that 20%. So number one, you're able to push a lot more money into a retirement plan with a solo K. You can then decide whether you want it to be tax deductible or Roth. If you're a real estate investor, getting around the UBTI tax as per Internal Revenue Code Section 514C9 is a huge, huge benefit that the SEP IRA doesn't have. And then of course, that 50K loan feature gives you the added flexibility if you are in need of some cash to get tax-free, penalty-free use of those funds. So if you're self-employed, independent contractor, not only do you get to control your life, you get to do what you want. You don't have a boss. You can work at home, work at Starbucks, whatever you want. You also get to have the best retirement plan. And honestly, if I could, I would put every single one of my 30,000 plus clients in a solo K. Unfortunately, not everyone's self-employed, right? If you work for Apple or you're retired or you just have a job that doesn't have the ability to do independent contractor work on the side, you're just overworked, or you don't have anything else you want to do, you're stuck, right? You got to do an IRA. You're not going to be able to do a solo K because you're not self-employed. So what is someone that's self-employed? Someone who has Schedule C income. You don't have to be the next Google or the next Tesla. You can sell stuff on eBay. You can sell stuff on Shopify, Amazon. You just need to have a side business. Even if you have a full-time job at Tesla or Google or Amazon, all you need is that side business. No full-time employees. Full-time employee means over 1,000 hours. You're in. And even if your spouse works with you, spouse is not deemed an employee for ERISA purposes. So if it's you and your spouse and you have a side business, your spouse is not deemed an employee and you can have a solo 401k for your business. So if you're watching this, you're self-employed, sole proprietor, independent contractor, small business with no full-time employees other than yourself, a spouse, or another owner, you need to go solo. You need to think about the solo 401k. It's the best retirement plan for you. It can make a huge difference and help you accumulate real retirement wealth for you and your family.